Okay, welcome to class 2 of this series of support and resistance. If you haven't seen class 1 yet, then make sure you go back and you watch that first, because if you don't, you're just going to be lost. So make sure you watch class 1 if you haven't. And if you have, then welcome, and let's jump into it. So we went over a few things in the last video. We explained what basic support and resistance is and a couple ways that you can play it specifically. And if you remember, I stated that one way that many people play support and resistance, I don't do. So what is that? Like we said, what many people do is, well, let's take this. They will go long near established levels of support, anticipating higher prices. So they'll try to go long near the absolute bottom, near that level of support, risking the low. So here is the low right there. What a lot of people do is they'll try to go long as close as they can to that level to have tight risk reward ratio, and they'll anticipate higher prices. But if you have traded this way in the past, what has probably happened to you many times is you get tagged out. You get tagged out over and over and over and over again if you have traded this way specifically. Okay? Now, there is a way to do it correctly, but most beginners, they go about it all wrong. And I'm going to explain one way that I do, or another way that I trade support. Okay? So what you need to understand is, underneath of levels like this, underneath of established levels of support like that, we have something called sell stops. Okay, so I'm going to plot that on here real quick. We have something called sell stops. Okay, what that basically means in simplest terms is we have willing sellers. We have willing sellers at this price point, willing to sell their positions at a price that is cheaper than what price or what the asset class you're trading is currently valued at. Okay, so we have willing sellers at a cheaper price, at a bargain price than what the asset is currently valued at. Okay, smart money does what? They pick up your shares at a discount, and what you'll likely see happen many times right after you get triggered out, you'll see price rally back up. We all have been there. We've all had this happen. It's like literally almost to the penny. It'll tag you out, take your stops, and then resume higher. Okay, that's because in many cases, price is doing what? It's going to come down just to take those sell stops out of the marketplace at a bargain price, and then resume higher. Okay, that was the sole intention of doing that, was to take your stop out of the marketplace. Okay, so like I said, what I do is I won't, like a lot of traders, so they'll try to go long near the absolute bottom. They'll get tagged out over and over again. What I do a lot of the times is I will wait for these lows to get taken out. I will wait for that low to get taken out, because I understand, I'm aware that there are sell stops beneath this level. So I will wait for that to get taken. I will wait for those sell stops to get taken. And something occurs. So whenever this happens, we're not going to go too deep into smart money concepts in this series. But when this happens is, when price takes out that low, it takes out those sell stops, it enters a discount marketplace, which basically just means it's cheap. Now, what I will do is I will look for long opportunities after it takes out that level, and I will look for a retracement back up within that previous established range that we now are working with here. If you look at my cursor, this is that range. Okay, and that's how many times I will play support. Okay, I don't look for price to just turn on the penny, like right at that level. I don't look for it to turn right on the penny. That's a loser game, in my opinion. I will wait for that level to get taken out. I will wait for those sell stops to get taken out of the marketplace. Now, I still consider that support. I still consider it support, but the key difference with me is I don't look for it to turn on the dime like that. I wait for it to get taken out, still support, and then I look for it like a little shallow retracement. That shallow retracement is simply that stop run. It's not really a clean break at that level. It's not a clean break at that level. It's a shallow run. And usually pretty soon after, you'll see price resume. You'll get your shift and structure, and you'll see it resume higher. That's what you want. That's that money. That's that money shot. Okay. And it's just the same exact, it's just the opposite. You just flip it around for resistance. Price will come up. It'll do what? It'll take out what's called buy stops. Okay. You'll have a lot of short sellers, or you'll have a lot of existing sellers. They'll have their stops right here. They'll have their buy stops right here. Many times what you'll see happen is price will do what? It'll come up, It won't stop on the dime like a lot of them want it to. It'll come up, it'll tag that, it'll have a little shallow run above the level just to purge those buy stops out of the marketplace. And then what'll happen many times is, as you'll see, it will retrace lower because it entered a premium market. I still consider this a level of resistance when it's a shallow run like that above the level, because it's just taking out sell stops. That's all it is. It's just taking out, or my mistake, taking out buy stops. And then what I'll do many times is I will look for a retracement back within that range. Okay, I'll look, because there's opportunities in there to make money after it purges those buy stops out of the marketplace, after it enters a premium marketplace. Okay, so that's all I'm going to do in this video, and we're going to go to lesson 3. I just wanted to bring clarity of why this is happening, why you might be getting tagged out over and over and over again, and you're wondering, why the heck is this happening to me? That's why it's happening to you. Okay, you're a willing seller. You are a willing seller at a bargain price. That's why, in the most simplest terms I can put it, you are a willing seller at a price that, and you aren't the only one. There are a lot of sell stops at that area. Traders, I mean, they play it the same way. Okay, and smart money, they know how retail thinks. They know where retail keeps their stops. There are plenty of other people playing it the exact same way. You had a lot of willing sellers at a bargain price. That was why price came down. That was why price tagged you out, and that was why price, and many times, continued to move higher right after tagging you out. Okay,